What is going on, everyone? Thank you guys for tapping into today's podcast. My name is Ryan Prenders, or Rye the Crypto Guy, and this is my business partner.
What's up, guys? Thank you for joining, being a part of this podcast. I am Nestor Sanchez, or Master Node One.
And we are the Master Nodes. Again, we thank you guys for tapping into today's podcast. Much appreciated as always. Make sure you guys stay to the end to hear about some additional resources that we are going to provide y'all to get you guys a little bit more zoned into cryptocurrency. Today's topic is, should I sell my crypto? With the market being down, a lot of people have this question on their mind, and we're here to answer it.
Yes, this is a great question. I think if you're a beginner, you should definitely be asking this question a lot less. Hodling is kind of the way to go, especially if you ask most crypto investors. Hodling is short for hold on for dear life. Well, in reality, it was just meant to be hold. But basically, this kind of depends on what asset you're holding on to. Crypto has been seen as riskier assets by most investors, and this can cause a whole lot of volatility. As you guys saw, when we saw that inflation was not going down, what was the first thing that everybody sold? That was crypto. And then the stock markets went down, commodities, and all these other markets as well. So if you're holding on to quality coins and quality projects, you're giving yourself kind of the best chance to survive and thrive in the next bull run. And I believe you should not be selling these coins. Obviously, you have to do your own research with these coins, and investing in quality is kind of relative. But if you have a vision with this cryptocurrency, if it has utility, and if it has a very growing community, then you kind of put yourself in a great position. Now, there are other coins that aren't that good for utility. They aren't the best. If you're holding on to assets that get their value from pure speculation, then these coins is maybe where I would kind of trim the fat of your portfolio, try and get that liquidity. Maybe you don't sell all of it, but maybe you just sell enough so that when the dip happens, guess what? You're right there in a great position to buy more of these assets. So in short, I don't think you should be selling your cryptocurrency unless it's a riskier cryptocurrency.
And you don't even have to sell it at the end of the day. You could also just move that money over to like a stable coin, to USDC, USDT, and just wait. That's what I know a lot of people are doing right now. Right now, they're just waiting. They're waiting for the market. I personally am just waiting for the right opportunity to actually buy the actual dip again and ride up with the wave. So we're just waiting at this point. And right now, I think we're kind of in what I consider to be a domino effect happening in the market. We have the Fed raising interest rates. That's kind of been the highlight of this year so far, with why a lot of people in our space and really just any investor believes any market, not just crypto, any market is going down right now. And it really has to tie in with this with our Fed raising the interest rates. Back in 2020, we saw them drop it to a near 0%. This helped a lot of people at the time because a lot of people were out of jobs due to the pandemic. So they needed to borrow money. They were short on cash, and a lot of businesses kind of just needed the extra cash to recover from either laying off a lot of their workers or having less demand for their products because less people had less money to buy products. After we saw them raise the interest rates, though, we started seeing this negative feedback loop amongst banks, amongst businesses, and amongst consumers. First, we saw banks getting charged higher interest or getting previously charged almost zero interest, and their interest rates starting to rise, which then reflected on big businesses and even small businesses. Big businesses began to rise up prices because they couldn't keep up with the debt that they needed to pay these banks back for. Another thing is the small businesses couldn't keep up due to the little cash flow they were receiving because their customers couldn't keep up with their personal debt that was growing on them. And so with a lot of this in mind, we find ourselves within this negative feedback loop because people were borrowing money left and right from their banks, assuming that the pandemic was kind of going to hold out and Moneybag Joe was going to come in with another check to save us. But the Fed kind of just said, no, we're not printing any more money. You guys kind of got your 3 rounds of free money, and now it's time for us to cash in. These are kind of just the negative effects that we're seeing. And so with all this, that's kind of leading a lot of investors to kind of panic. They don't know really how they're going to pay back their debts. They don't know what they're going to do moving forward in order to assure that their money is safe. And with these markets dropping, it's just not helping anyone.
Yeah. And all those stimulus checks from back in the day that we got in 2020, 2021, these are having a huge effect on inflation right now. And that's kind of the whole reason this rising interest rates hopefully is going to bring down the prices of most of these things that we are seeing now. So groceries have gone up, gas has gone up, and it's been pretty astronomical. Now, what causes people to buy and sell? It's not just prices, right? So we have other things that are playing a big role in how we see the markets and how we view what we're buying and selling. And one of these things that a lot of people don't really have control of is your emotions. So one big emotion that a lot of people feel
Well,
right now.
actually, I wouldn't say that they don't have control of. I believe it's the opposite. I believe their emotions have complete control over them.
Yeah, definitely. They're feeling a lot of stuff right now. If your money is moving, especially in the negative side, you definitely are feeling some type of way. But also when your money goes up or when other people's money goes up, what does this cause? FOMO, right? So this is a huge emotion that investors feel that I'm pretty sure a lot of us have felt before. FOMO stands for fear of missing out. This is an emotion that investors feel when they did not get into an asset when it was low. And guess what happened to that asset? Boom, skyrocketed. So it doesn't do well. I mean, it does really well. And then these investors are like, dang, like it's going to do well again. I need to invest before the next run. So what they do is this can cause basically investors who are not as patient to just jump into investments, feet forward without any precautions. And when they're jumping into these investments, it's usually at all-time highs because they're hearing all this chatter. They're hearing all these people who have made money. And what happens after all-time highs? Well, let me just cut right to it. There is a correction, right? You can't just go up and up and up. You can't just inhale without an exhale. So there has to be this correction. And when this correction happens, everyone gets scared and they sell. So these are some of the things that investors feel, especially in the beginning phases. They hear that everybody's making money, so they have to jump on this trend and they end up getting burned because they did not educate themselves on what this asset is that they're actually buying, but they just heard from the noise.
Another thing that you got to consider is people are also missing out or have this fear of missing out when it comes to selling. Right now, we're seeing all-time lows being hit, and a lot of people are shorting the market. And when you short the market, you're essentially saying, you know what, I think it's going to go down even more to this price. So I'm going to go ahead and put a sell in right here, automatically assuming that the market is going to go down to this price point. I believe that it will go down to, or it's going to go down to this price point because other people are telling me that it's going to go down. They have their money in, they've been making money going down. So why can't I jump in and start making money while this market is falling as well? And when it comes to FOMO, I think the biggest thing, and I'm a victim as well, the biggest thing for me is the 2018 event that happened with Bitcoin. Back in 2018, I remember I was in high school, and then a lot of people were talking about, oh yeah, did you guys hear about this new coin? It's really easy to buy. All you got to do is download Coinbase. You enter in, and back then you didn't have to do a know your customer. It was just entering in your email, password, setting up, just basic information about yourself, and that's it. Then you could just buy the coin instantly. And so they were saying, oh yeah, this coin overnight, it went from like like a couple $100 to a couple thousand. And then by that time, it had jumped to like around, I believe, 15 when I first heard about it. And, later on that day, I ended up going home and downloading the app and buying some. Rose to 18. I was like, oh, it's going to keep going. It's going to keep going. And then just completely lost my money overnight. It was devastating. And so when considering that, uh, you can't always just jump on the so-called quote unquote bandwagon thinking that you're going to become a millionaire overnight. And I feel like a lot of people, they have this urge to want to become an overnight sensation, or become an overnight millionaire. But have you ever stopped and thought about what you're going to do after you have that money, or what you're even going to do with that money to begin with? A lot of people don't. And so emotions come and play a huge role in any aspect of investing. For me, like I said, 2018 was kind of my victimization point when it came to Bitcoin, because I knew that from there on, I wasn't going to let emotions control my investments in my future.
Yeah, you're a victim.
I really was though. I really was though. I'll admit it. I'll admit it. I jumped on the bandwagon back then, and it really hurt me.
Yeah, and I think it also comes down to like pocket watching too, or like all your friends are making $100 overnight. Well, they could do it, I could do it.
Yeah.
And because they're doing it, I mean, I have to show that I could do it as well, right? Or
Yeah.
I'm not as good. And like a lot of these emotions, they play with you, right? And now you were like, damn, like not only did I not make money, but I lost a lot of money. So
Exactly.
like this is definitely being about like you, like what you're saying. What are you gonna do with this money? Because if you don't have an actual objective and you're just doing it because other people are doing it, well, it's not probably going to pan out the way you want it to.
At that point, you're definitely just giving into emotion.
Yeah, exactly. And speaking of emotion, there are other emotions that we feel. Pocket watching is one of them, fear of missing out. And we have this negative side, which is FUD. So, what is FUD? It stands for fear, uncertainty, and doubt. These are some of the emotions that holders may feel when there's bad news or kind of bad market sentiment. So as a hodler, and if you're feeling fear, uncertainty, and doubt, what is that going to make you want to do? It's going to make you want to sell in order to cash out or in order to save as much money as you can. When in reality, when the bad times come, this is the best time to buy, right? Because the whole point of investing is buy low and sell high. Now, the people who are feeding you this fear, this uncertainty and doubt, they could actually have an ulterior motive. So I'm gonna give a good example that when I learned about it, it completely changed the way I thought about news, about markets, and about the way banks do business. So banks, they're obviously a business. And in America, Ryan, what do you think is the number one thing for businesses?
To maximize on profit.
Maximize on profit, right? So as a business, their goal is to make as much money as possible. And their whole thing is investing into markets, right? They invest into crypto, they invest into stocks, they invest into commodities, all the whole 9 yards, right? So in order to get the most money you can, what do you have to do? You have to get in at the best price. So if you're able to control the way people think about a certain asset, you think that could give you an advantage?
Yeah, it most definitely can.
Absolutely, right? So most of these banks, they actually own news outlets, right? You might be thinking, why would a bank who has money, who all their job is to literally invest into markets, why would they own something like a media company, right? Well, this is the answer. They're able to kind of tell you what to do without actually telling you what to do. They're able to tell you, hey, Bitcoin, it made $1 million deal with this person. So this is a great time to invest in it, right? Or they could tell you the opposite, right? Bitcoin just got hacked for $10,000, right? And what is that going to cause you to feel? So they're able to kind of put things out there, whether they're true, whether they're not true, whether they're just speculation, in order to make the market move a type of way. So if you were in a bank, would you want to have the best price or maybe a medium price. No, you're going to want to get the best price for that asset. So if you're going to make it go down, you're going to start spreading fear. You're going to start spreading this uncertainty, this doubt, and you're going to put this seed into people who don't understand what they're investing into so that they can sell it, right? So this is kind of why investors need to understand the assets that they're purchasing in order to limit all these different emotions that happen. Because if I heard from the banks that, Bitcoin got hacked, I understand how Bitcoin works. So I understand that Bitcoin didn't really get hacked. In reality, somebody got hacked, right? Whether it be exchange, whether it be that person got their password taken. So I understand, hey, crypto is very safe. Crypto can't necessarily get hacked, but people can. So this is why going into all that, you want to understand banks, other people, they might have an ulterior motive, but what's your motive? What's making you earn this money? So that's kind of how I think about this whole emotions.
So far, you guys have heard of the reasons why we believe emotions come into play when kind of deciding whether or not you're going to hold on to an asset. And we just want to make it clear to you guys should not be emotional, especially during a time right now. So far, the crypto market has been cyclical. Let's take Bitcoin, for example. Bitcoin has an average drawdown of around 85% after every bull run. We saw Bitcoin hit an all-time high of around 66K back in November of 2021. Since then, we saw it drop down drastically, and its 85% drawdown from its previous all-time high of 66K is around the mid 10K range. So when it comes to Bitcoin, as it is the lead in the market and has a really huge dominance over the market and determining market prices even for other coins. When it comes to Bitcoin, I'm really not that worried because we're nowhere near our 85% drawdown. And if a man like Michael Saylor, that has at this point staked his life, his reputation, his career, I'm sure his children on the hope that Bitcoin is going to go back up, I can't be really that worried with the amount of money I have versus the amount of money Michael Saylor has. And so that's kind of just one of the reasons why I'm not too worried. And me personally, I'm not selling right now. I'm just waiting. I'm in that zone where I'm waiting for the right opportunity. And so we'll kind of just see where things go. Waiting on it and hoping for the best. But when it comes to the biggest question of this podcast is, should I sell? Really, that's going to be up to personal preference. For me personally, I'm waiting for the best opportunity. I know a lot of people that are buying currently. The dips on the way down, they're still doing their dollar cost average every week, every month, every 2 weeks, whatever they have it set for, and they're also waiting as well. And if you want to go ahead and sell your assets because you really need the money, hey, you know what? You really need the money, and there's nothing else we could do about it. But as of right now, I would say kind of just wait it out. You really, what do you have to lose at this point if you've lost half of it already? That's the way I think about it. And so, we'll kind of just see where this market is headed. Um, I believe it still has a long way to go in terms of its downtrend, but we'll see.
Yeah. And I think it's all about sticking to your plan, right? Like you were saying, if you really, really need the money, then okay, this is what the whole investing portion of this is for, right? You're not just investing so you never see the money again, right? So it's about sticking to your plan. Dollar cost averaging is a great strategy to get basically any investment, get the average cost of any investment by investing constantly. So if that's your plan, then stick to the plan. If your plan is, hey, you know what I'm going to do? I'm going to wait for the absolute bottom to invest 10K and then I'm going to leave it for 10 years. That's a great plan as well, right? But you have to do it based on your own personal preference, your own personal uses. And obviously, we can't tell you what to do, nor do we want to tell you what to do. But the number one thing you should do is be informed, right? So don't worry about what me and Ryan are doing. Don't worry about what your friend's doing. Worry about what you're doing and why you're doing it. Because at the end of the day, this money is made for you to do it however you want to. If you want to spend it all day with video games, that's your job, bro. That's what you do. If you want to invest it into a soccer team, go for it. Like that's totally your job, your preference. And that's at the end of the day, I'm going to continue to dollar cost average. And obviously, I am holding on to a bit of extra cash right now because I know we're in a bear market, and I'm holding on to that cash to buy more assets. Remember, the whole point of investing is buy low, sell high. So if you're wondering when the best time to buy is, whenever it's low.
And that kind of wraps up today's podcast. Remember to follow and subscribe to our personal social media accounts to stay up to date with us, and follow the Masternodes on Instagram, Facebook, LinkedIn, TikTok, and Twitter, all at the Masternodes. Our visual podcast experience can be found on YouTube, and our audio podcast experience can be found on Apple Podcasts, Stitcher, Google Podcasts, and all your other favorite podcast sources. Remember to visit our website, www.themasternodes.com, and subscribe to our email list to receive the latest and greatest cryptocurrency information.
Absolutely. And we also have some other resources for you guys. You can check out our Discord. We have a lot of great information on there. You can check it out. Frequently asked questions. This is something that you definitely need to check out if you're a beginner in crypto. We also have, for those of you who want to get really involved in the space, we are a part of a team that is a multi-million-dollar business. It is called I Am Mastery Academy. This academy will literally get you from A to Z, from how to invest, from how to stake, to how to make money passively, all the way from trading with leverage. So you can literally get the whole spiel and be a part of our team with I Am Academy. So if you guys are interested, you can always hit up our line. We have all of our socials that you can always be a part of. Just text us, send up a DM, whatever you'd like, tweet at us. We're here. All right, guys. And that concludes it for today. Have a good one. Make sure to choose kindness.
Yes, thank you guys for tapping into today's podcast. Much appreciated as always, and bless up. Also, there's one more thing I wanted to add before we end today's podcast. This goes to all the women out there in the United States currently. So, as we all know, the douchebags at SCOTUS recently overturned the Roe v. Wade decision. And we wanted to let all women know in the United States that we stand with them. You know, we were made by women, we were formed by them, and without them, we wouldn't be here today. So we just wanted to send out our support to all women out there and let you guys know that we stand with you guys at the Masternodes. We want to send our apologies as men for failing you guys in today's society, and we hope that we could do better. And if you guys ever have any questions or concerns, we know of resources to send to you guys to go ahead and give you guys the support that you guys need.
Absolutely, guys. Have a good one. Here at the Masternodes, we are not making any claims as to income you may earn. Before entering any agreement, please use caution and seek the advice of a professional advisor, such as attorney or financial advisor.
Please ensure your own research is done before investing any money into the market.